Florida is growing fast, guys, but the big opportunities aren't where you'd expect. Cities like Lakeland are quietly leading the way with rising rents, population growth, and room to run. Guys, let's take a clearer look today at why these markets are starting to shine and how you can get ahead of the curve. Stay tuned. All right, gang, crew, peeps. So today we're talking a little bit about secondary markets and more specifically, a secondary market that I focus on. And I kind of just stumbled on this one. I wasn't really searching for it. I was the Tampa guy. And I've been priced out of Tampa. I haven't been able to purchase anything in Tampa proper for the past 5 years at this point. And it's not for my lack of efforts. It's just I have not been able to compete or willing to overpay, in my opinion. So it landed me in a secondary market, Lakeland, Florida. Lakeland, if you're not familiar with it, it is like a logistics hub. It is right in between Tampa and Orlando, two booming MSAs that have potentially hit their peak. People were saying they were overpriced back in 2022 and they were overvalued and shit was going to hit the fan essentially. And I found a really good property or really good deal in Lakeland, went after it, then found two more in Lakeland and really have grown fond of the place. Let's backtrack a little bit and talk a little bit about Florida in general. Why Florida? There are challenges with any market. There are positives about any market, but Florida added over 400,000 residents in 2023, making it one of the fastest growing states. I think U-Haul ranked at number two, behind Texas, I believe. And we're going to get a new ranking pretty soon for 2000 at the end of 2024. Usually it comes out in January, February of 2025. Plenty of people are moving down to Florida for a variety of reasons, right? But number one is the cost of living. Two is weather. You're going to get people that are retiring down there, snowbirds, et cetera. People want a better place to live, typically from the northern regions. That's where people are moving from. So Lakeland is strategically located between Tampa and Orlando, and it benefits from people being out priced in Tampa and Orlando. We're getting that influx. Our rent prices are lower than Tampa and Orlando, making it more affordable for workforce housing. People that are working logistics, people that are working in retail, in insurance, in healthcare. There's so much going on. There's logistics, there's education. Lakeland has a really diverse economic landscape, which is important for us investors. This is what we look for when we're looking for a market to invest in, along with rent growth, along with job opportunity, along with population growth. Lakeland's population growth is about 3% annually, which is outpacing the national average, which is something that you want to see. Top migration drivers as well include affordable living compared to the coastal cities like Orlando, not necessarily coastal, but Tampa. And we get those. And we ask people that are applying to our units, like, where are you coming from? Tampa, Orlando. They just can't afford it anymore. So they're moving out, especially with it's funny. You think in a recession, people are losing jobs. And you think that in a recession, we would lose tenants. But what happens in these major cities, major metropolitan areas, primary markets, Tampa, Orlando, they get priced out. Let's say they lose their job, or maybe the spouse loses a job. They have to downsize. They have to make a decision. They're going to downsize, they're going to buddy up, or they're going to move back home. So those people are relocating. People are moving right now, and they're going to places that are more affordable. Obviously, if the rent is more affordable, meaning we can only charge so much for rent, what about the purchase price? Yeah, the purchase price has to be lower as well. It is price per door. We pay a lower purchase price, but there are also benefits to Lakeland that is different than Tampa. Taxes are cheaper, insurance is cheaper, etc. And labor is cheaper as well, slightly, not much, but it is a little bit cheaper than Tampa proper, Orlando proper. Now, that coupled with the opportunity and ability to work remotely with certain jobs helps us out. We saw challenges in our markets shortly after purchasing in 2022, and I'm going to go through those in a little bit. But here are some high level numbers. The rent growth in 2024 was 5 to 6% year over year, even with the oversupply in metro areas. So we have oversupply as well. However, we were able to push rents kind of, and I'm going to go into that in a minute. Tampa and St. Pete, the same statistics showed 4 to 5% rent increase. So they are kind of squeezed in these areas, although 4 to 5% is still excellent and beats the national average. So what are some of the key drivers to this? So influx of families being priced out of those cities to us, to coming into Lakeland, retirees, snowbirds, et cetera, seeking more affordable housing and continued job growth in logistics, healthcare, and tech sectors in Lakeland in specific. So there was a temporary slowdown, and we hit this. We ran into this head on in our properties in 2023 to 24. Florida experienced an oversupply in Class A apartments. Why? Well, what happened 2 years prior? Interest rates were the lowest in history, and when that happens, people build. Building becomes more affordable, and people need to build because their supply has been a huge issue in the United States. We need to provide more housing for people and renters in particular. Anyway, when interest rates were so low, 2020, 2021, 22, and at the end of 22, they started rising. 2 years after that, 2021, what happens is supply comes to market. It takes about 2 years, sometimes shorter, sometimes longer, for that supply to hit market. We saw a lot of Class A hitting market at that time. And we, in our C minus class properties, were competing against A class. They had a lot of rent subsidized housing. They were offering incentives for people to rent in A class units. And we could not even, our rents were above that. We were asking for more than the A class rents. We lost out. However, the tide has turned, and I will get to that as well. We are now able to push rents once again. In 2020, we purchased in 2022 our 44 unit rents. We were asking 1325 or something like that. We quickly started trying to ask 1400 and 1425. We were able to achieve some rents at that price. Then what happened is we were trying to ask 1350, 1375, and we were finding it challenging. And this is exactly when, in 2023, when the A class properties were kind of stealing our residents. And the recession didn't really hit yet. People were not losing jobs. Today, last month, I believe, was the unemployment rate, national unemployment rate was 4.264 or something like that, which is pretty high. That had not been taken into account yet. People were gobbling up the A class, filling up the units, and we were stuck. And I ended up, now that I'm doing leasing with my property manager, I ended up dropping our asking rents to 1335. Now, I'm talking about large 2-bed, 2-bath units, okay? In C minus areas. Although we do obviously renovate them and upkeep the property pretty well. We were struggling. We were not hitting the 1375 for the 1400, not hitting 1375, 1335. We started to see some traction. That's a decrease, right? So let's say our rents were 1400. That's like a 5% decrease to 1335. That's a big decrease over the course of a few months. Next, what we do as multifamily investors, I mean, we project a year-over-year rent increase. Either it could be flat some years, but typically we're going to project 2 to 3% year over year. Same thing with expenses. We're projecting those to increase 2 to 3% year over year. Recently, we had hurricanes, Milton and Helena. And thankfully, our properties were strategically located to where we did not receive the same amount of damage as Tampa did. This began pushing people out of Tampa looking for a place to live immediately. We saw a huge influx in applications for our units at 1335, 1350. This was in the fall of 2024. We quickly bumped rents up to 1425, and we have the same traction, and we have leases signed today at 1425. That is a 6% increase, 6 or 7% increase in rents from 1335 to 1425. That is huge. Okay. We are able to achieve those rents today in Lakeland, whereas you cannot necessarily push the rents that high in Tampa. There was damage and people got displaced, and we capitalized on that displacement. But the curious thing as well to note is that we're getting people from Orlando. I spoke with a few people, and this is obviously just a few residents, saying they were paying $2,000 a month for a 2-bed in Orlando. They can't afford it. So what happens? They come to Lakeland, the logistics hub, where there are jobs, where it is still affordable, where the neighborhoods can be nice. Also, something to note is the I-4 corridor. The I-4 is a huge highway. The I-4 corridor is a critical economic artery in Florida. All right, so this connects Tampa and Orlando, with Lakeland sitting right in the middle of it. This is a prime location, guys. The I-4 corridor makes Lakeland a key hub for logistics, distribution, and business growth, benefiting from easy access to both major metropolitan areas. They have been talking for years about a SunRail, a high-speed train going from Orlando to Tampa, which is happening, but to put a stop in Lakeland. If that happens, boom, we're talking huge growth. Okay, back to supply. So construction peaked in 2023. This led to higher vacancies. However, we're past that now. Lakeland avoided this, and specifically our properties, because we have a lower cost of entry. And what about the future? So we are expected to be undersupplied in 2025 and beyond. And this is crucial to know as an investor. New construction permits in Florida dropped 30% in late 2024 due to high interest rates. By 25 and 26, supply is expected to undershoot demand in secondary markets like Lakeland. Crucial and key to know. So there's a projected housing gap by 2026 in Polk County by 10,000 plus units. The result is going to be higher rent growth, stabilized occupancy rates. Key for us today is to know that cap rate decompression, cap rate expansion, cap rates have gone up significantly, 150 basis points over the past 2 years, just because people are not willing to purchase anymore, because buyers pulled out. Well, a lot of reasons, but those are a couple of the reasons. Some other things like obviously interest rates rising, increased operating expenses, insurance, nightmare, right? Taxes as well, and economic uncertainty, as well as cost of goods, labor going up. So all of these factors made cap rates increase, meaning valuations go down. 150 basis points is a huge number, a huge leap in 2 years. What does that mean? That means you shouldn't buy? Hell no. That means you should be buying right now. Let's take the example of an NOI, $500,000 NOI. At a 5 cap 2 years ago, at the peak of the market, a 5 cap NOI of $500,000, the building is valued at $10 million. Let's take that same NOI, $500,000, divided by a 6.5 cap. That's only 150 basis point swing, which is very fair if you're in the game. That is exactly what happened to us. There's a 150 basis point swing. So we're going to divide $500,000 instead of by a 5 cap, 0.05, making $10 million valuation. 0.065, we have a valuation of, oh my goodness, $7.692 million. That is a $2.3 million haircut in 2 years just because of outlook. The same exact NOI. You have to understand that. So if we are buying today, we are buying at a discount. What is crucial for you to do always is to ensure cash flow. If we ensure cash flow and we think that we're not at the bottom yet and the values may still decline, if you are cash flowing, you ride that out. You take the opportunity to purchase now when 90% of the buyers pulled out. When people are getting no hits on their listings, now's the time to get that hit. It is crucial for you to purchase now or invest with somebody that is purchasing now. Do not sit on the sidelines. What's that famous quote? Be greedy when others are fearful. Nobody really actually does it. People just become fearful. Now is time to be greedy. Get involved in the game, guys. So the job market is expanding in logistics, Amazon hubs, Publix distribution centers, healthcare is growing, and education as well. Now, Florida in general, the job growth for 2025 is expected to expand 2.5% to 3%, which is surpassing the national average. Lakeland is attracting distribution hubs, boosting job opportunities for many employees down there. And the unemployment rate, 2024 is 3.2. Okay, that is below the national average. I think it's still pretty high, which means that people are going to be buddying up together, living together, roommating, moving back home, and that's okay. That will turn back around. The national average, like I said, I heard last month, I believe was 4.2, 4.26, which is very high, guys. That signals a recession to me, although I am not an economist. I studied economics in college. I got a minor in it, but I am not an economist, just to be clear. So let's have an optimistic outlook. We're at the end of 2024. For 2025 and beyond, secondary markets are going to outperform major metro areas because of the fact that they could be at the top of their pricing points. I'm talking about rents. Rent growth in Lakeland is projected to average 6 to 7% annually through 2027. That's where you want to be. But do not ever project that in your underwriting. Keep it at 3%, 2 to 3%, and keep expenses at 2 to 3%. You might even want to be flat. But this comes down to what you need to know your market so well. Since we have 70 units in the Lakeland area, we know what rents are. So when I find an under market rent, I know that it is really under market because my neighboring properties gets that rent, the market rent. We command it. We are driving the market. So it is very easy for me to tell whether or not rents are under rented. Now, that doesn't mean you should pay what it would be worth at market rent, right? Because you have to get them there. And there's a lot of work involved in that. And you should not be paying or overpaying, in my mind, for a property that does not perform at current level. You have to have a cash flow currently upon takeover. Okay, so home prices as well in Lakeland are expected to appreciate by 5% annually as demand outpaces supply. That's important as well. So now is the time to really get started or get invested, secure some deals. Do not wait. This is the time to be greedy. If we're not at the bottom, who cares? What do you have to do? Just ensure you're cash flowing through it. Ensure that your debt will not come due when you think the bottom is going to happen. Okay. Make sure you have fixed rate debt for the next few years, and you're going to be fine as long as you're cash flowing. And as a matter of fact, things are going to turn around with this 150 basis point swing in, and maybe 200 basis points swing by the end of this in values. They're going to come back around. It might take 4 or 5 years. Just make sure your debt can last 4 or 5 years and carry you through. So let's just wrap this up. So Lakeland represents Florida's rising tide. Okay. We are inland. We're not susceptible to the same type of damage that Florida's typically known for, the hurricanes. It is affordable where we are in Lakeland, in Polk County, growing rapidly and providing a hedge against oversupply in the larger cities. For investors in 2025 through 2027, guys, this is going to be a pivotal couple of years for you for acquiring assets before the next undersupply cycle. Get in now. Now is the time to get in. The valuations have decreased, and supply is going to pick back up once interest rates go back down. Now, you're noticing that the Fed is cutting rates, but the 10-year Treasury is still baking in increases. So that's based on the outlook of the market, how people are feeling. People are still not feeling good. There's uncertainty. So the 10-year Treasury is going to be up, meaning your interest rates are not coming down yet. Although the Fed is cutting rates, that doesn't cut rates for us, the consumer, for people looking for loans. Okay. Just be wary of that. Key message, guys and gals, Florida's boom is far from over. Secondary markets like Lakeland offer the best combination of growth and stability moving forward. There's going to be challenges with everything, so nothing is perfect, okay? But just go where you think that you can add value, increase operations that cash flow your properties are well enough to beat 4, 5, 6% cash on cash, and you ensure that you have your debt in line with your vision and your business plan, and you go out there and you crush this game. And if you can't, if you're afraid, but you have money, you got to invest with me. I know what I'm doing now. It's been 5 years, and obviously I'm still learning every single day, but I am one who absorbs knowledge, takes action, and kicks booty butt. I hope you guys have a wonderful holiday season. I love you so much. Enjoy every moment with your family, your loved ones, and 2025 is upon us. Let's buy some deals. Let's rock together. Have fun. All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.